right. Well, welcome in, everyone. We are excited to have you with us. My name is Jeffrey Nance, and I am the director of the AMPT program. Glad to be with you guys today. So, we have quite a few people that are going to be leading out in various capacities today. So, I will be introducing those folks to you here in just a bit. But we want you to interact. We want you to ask questions. We know that this particular topic, it just, there's a lot of people that have a lot of questions about what we're going to discuss today. So we know from our registration that there's a lot of people that are either going to be here with us today or they're going to catch this on the recording that have a lot of questions and are really interested in this topic. So we're really excited to deliver this to you. Essentially, what we're going to talk about is navigating the markets and how the election could impact your investment. So that is going to be the thrust of what we're going to talk about. We'll have some particular things about President-elect Trump and what he did in his first term of office and how that could impact potentially what he's going to try to do in the next 4 years. Then we're going to have some historical data as well and what tends to happen in the first year of a presidency and the second year of a presidency. So we're going to go through some of that as well. So we'll talk about some potential sectors that could be specifically impacted in a positive way, and then some that might be, affected in a I'll air quote a negative way here. So that would be something we would want you guys to know about because it could have a direct impact on you. And then, of course, you're always just watching the market. So I think anytime you can know historical data, that's a good thing. And if you have patterns that are predictable, repeatable, and reliable, then you have a sense of, okay, this could make sense if this happened because historically that would make sense. So we'll talk a little bit about that as well. So who is going to be talking to you today and what is their role here with AMPT? I introduced myself a little bit. I basically took over the lead here for the AMP program about maybe, I don't know, maybe April or May, something like that. But most of that was background work. I went to the forefront there in about really August, September. And so hopefully you guys that have been with us have been able to see some different things there and how that's impacting you. And we're really excited about what we think we're going to be able to do with this program moving forward. And I'm excited to be in the lead here and working with this group of people. So Jenny Taylor is one of our AMPT investment advisors. She's going to be doing some of the heavy lifting today. So we wanted you guys to hear from her. And then David Verbruggen is also one of our AMPT investment advisor representatives. And he's also, I think, the director of charts, which is a charting program that we use. So he carries a couple of titles with us. And then you'll hear from Ben Russell, director of client services here with AMPT. And he does a lot of other things with us as well, Market Corner 2, and then just a whole host of things. And he brings a lot of wisdom, a lot of experience with him. So then we have Denny Foster, who you see his face there. He's also one of our investment advisor representatives. So for those of you that are going to move forward with us, we want you to see these faces because these are the people that you're going to be working with for those that move forward with us. So appreciate all of you guys being on. I am going to now turn it over to Jenny, and she will basically carry us, and then the rest of us will just interact here and there and try to present a really, really great webinar for you guys, chock full of information. And then, of course, we would encourage you to ask any questions you want over there in Q&A, and we'll be able to knock out plenty of those throughout this program with everybody that we have on here today.
Thanks, Jeffrey. Welcome, everyone. We're excited to be on here with you. But as Jeffrey had mentioned, we're actually going to get started with talking about some of the historical moves the market has made during presidential terms. So David is actually going to handle that section. So I'll flip over to that slide and let him take it from here for a few minutes.
Thanks, Jenny. Appreciate it. Yeah, guys, as the election just happened, it's kind of fun to look back and see, okay, in general, over the course of 4 years of a presidential term, what are some patterns and trends that we have seen year by year in general? Now, this data is going back all the way to 1900. Right? It's over 100 years worth of data that has been kind of compiled and then generalized, right? So, of course, we're going to see some differences. We're about to go take a look at the first term of President Trump and see how did that play out according to what we're seeing on the screen here. And then we'll look at Biden's term as well and see how did that play out according to what we're seeing here as well. Now, again, this isn't saying, hey, this is the blue book or the blueprint of what is going to happen over the next 4 years. We don't know that. There can absolutely be changes, but in general, this is what has been found. In the first year, we see primarily a bullish move with maybe a little of a correction in the third quarter, and then a bullish end to that first year. Makes sense, right? People are excited. Yeah, okay, we got some change coming, and people are excited. That second presidential year tends to be a little bit more sideways with some deeper corrections, but then still a bullish run towards the end of the year once again. The third year, you're looking at some bullish movement with some corrections during Q2 and Q3. And your theme here, another bullish end to the year. Market likes to do that, a little bit of a bullish end to the year. So hopefully we get that this year as well. And then during the election itself, sideways with some corrections in Q1 and Q2, with a bullish run towards the election and then some volatility, right? And we saw a little bit of that this year. But let's go ahead now and let's look at President Trump's first term. We're going to look at 4 years of data here and just kind of compare with what we just looked at. You can see that first year, 2017, we had a really nice bullish run. On that page, it said there was be a little bit of a correction in Q3. There was something really minor there. I don't even know if we can call that a correction yet, but there was a slight pullback at the beginning of Q3 there. So pretty much on track. You look at Q2 there, and yeah, okay, we're starting to have some pullbacks now, right? I'm sorry, I said Q2, I meant the second year. You start to see we deviate a little bit. We have some strong support there, actually, if you look at that line right there. Nice move up through the middle of the year, and then things got pretty volatile towards the end of that second year of President Trump's term. About a 20% drop right there. You go into his third year, things are a bit bullish again. We have some corrections in both Q2 and Q3. And then again, a very bullish end to the year. So that year was exactly as written, right? Looking at 2020, now 2020 was a little bit different. What was it about 2020 again that was so impactful or different? Besides the year taking a decade, it was COVID, right? And so, that's a little bit outside of the blueprint of what had been, what was generally what we see. So we're looking now at that COVID crash, then some nice bullish action again. We get into some volatility right there where Jenny's pointing just before the election, and then a bullish end to that year as well. So overall, pretty accurate, right? From what we saw to what we're looking at on the screen, it was pretty accurate. Now let's take a look at Biden's term and see how that kind of compares. In the first year, once again, we see some very bullish action, right? Almost exactly as written. We have a bigger pullback in Q3, just like we saw on that screen. So it's a little bit of a deeper pullback than what Trump saw in his first year. And then not as strong of a finish to the end of his first year. And we can see why now, because his second year, we had the bear market of 2022. We had deeper pullbacks, 27% total decline, and we finished 20% down. So that one was a little bit off script there. You look at I'm sorry, go ahead.
I just had a thought to add here.
Yeah,
So
go for it.
if you guys remember, this was when 21 was when inflation was starting to pick up.
Hmm.
And then the Federal Reserve started raising its interest rates. So those combinations are really what caused that 22 bear market.
Yep. Yep. Absolutely. And then when we get into 2023, we break that downtrend. We start uptrending again. We still had a little bit of a correction in Q1 there, and then a deeper correction in the third quarter of about 10%. Still a very strong finish to the end of 2023. In fact, those are weekly candles you're looking at, and 9 of the last 10 candles that year were clear, so moving up. And in that time of the 9 straight clear candles, the market moved up about 16% in the 2 months. So very strong finish to Biden's third year. And now we look at his fourth year with this year. We had a very good start to Q1, very bullish. Had a little bit of a pullback late Q1, and then another pullback late in Q2. And then we saw some bullish movement / some volatility heading into the election, right? Now the election's behind us. We all know where we are. The market took off for a little bit right there. I believe the S&P was up about 5.5% in a week. And then since then, it's been a little bit more volatile. But that just kind of gives you some comparing and contrast between President Trump's first term and President Biden's term. And you can see that in both cases, there are some pretty good similarities. Some years might be a little bit different, but overall, some pretty good consistencies to the general trends that we saw earlier. So, Jenny, with the election now being over, and we recognize that, okay, President Trump is going to be having a second term, what are some of the policy changes that we might be seeing coming into his next term?
Yes, so that's a great question. It is going to be interesting to take a look at what those policy changes are going to be and what maybe caused that post-election rally that we saw there afterwards. But one thing I'll just add to kind of round out that section is what we've kind of seen since the 1900s is that this ends up kind of becoming a self-fulfilling prophecy. And of course, as David said, there are going to be times the where it doesn't follow that general trend. But in general, it does kind of tend to become a self-fulfilling prophecy. So that is something, we're always taking that into account with where we are in that presidential cycle of their administration, year 1, 2, 3, and then the election year, their last year of that administration. So one of the main reasons why that really maybe didn't even have to do with policy is that why there was this rally after the election was completed and we actually knew who won that early morning on Wednesday is because the market, it really does not like uncertainty. It likes stability. So once we actually started seeing that it was more and more likely that Trump would be elected, the futures of the market just started climbing and climbing and climbing. So they like investors and market participants like stability. That in itself was a just bullish that we knew who was going to be, we knew who won. And secondly, aside from that, investors already know much of what to expect from a Trump presidency because we saw what that was like from 2017 to 2020. But the main policy changes that we think are going to impact the market and really why we saw such a jump, that 5% move that week of the election. Really the number one would have to be the tax policy and his continuation of lower corporate tax rates, as well as then possible tax cuts or revisions to capital gains. And as we know, in 2017, the Tax Cuts and Jobs Act was passed, which slashed corporate tax rates and boosted earnings for companies. And now, with the fact that Republicans retained the control of the House and then gained control of the Senate and the White House, it's likely that Trump is going to be able to extend these tax cuts for another, I don't even know how many years, hopefully quite a few years here. But so that is a big one that will help stimulate the economy. it is just it's good for our economy, it's good for the stock market. The second would have to be the deregulation and his emphasis on the reduction in regulations, smaller government, less red tape for companies to have to work through to do what they need to do. So this is particularly helpful in sectors like energy, finance, healthcare, even tech. And in this second term, we are thinking it could, of course, have impacts specifically to energy, as well as then maybe even healthcare. But there are some people who think pharmaceuticals, but I just kind of point out that that may be different than his last term, because he does have RFK Jr. Um, you know, I think he got a health, and I can't remember what his title is, but he's part of the administration and is probably going to be kind of pushing against status quo in healthcare, in pharmaceuticals, and that stuff. So that could have some impacts to different parts of the healthcare sector that maybe would be different than his first term. The next part would be a positive for the market, would be his infrastructure investment. So just like under his first term, he's really going to focus on this again. The government spending, and I'm hoping they shift things around instead of just continuing to increase our deficit. But they're going to look to do infrastructure projects, and this could benefit construction, materials, industrial sectors as well. And then lastly, this last one, trade and global relations. This can kind of be positive, but also maybe negative at the same time. His pro-America policies and protectionist stance could help boost the domestic assets and our domestic companies. But at the same time, there are concerns over trade wars, potentially with China again, European Union, and that those could cause some supply chain constraints, but also that potential for continued or increasing tariffs could, of course, impact the supply chains, market volatility, and especially for those sectors that are dependent on imports, such as technology and manufacturing. So, with the post-election rally, we have seen some sectors that just initially responded and they loved that Trump was reelected, and others not quite so much. So we're going to take a few minutes to discuss some of these sectors and how Trump's policies could impact them going forward. So first and foremost, I think, as we've listened to, I don't know how many months of campaigns and all the stuff on social media, I think most of us realize that Trump was really, going on a couple of different major focus points. But one of those was campaigning for energy and going back and getting our levels to the level they were under him, deregulating the fossil fuels again. And so there is a positive outlook on this for this industry due to deregulation and the support for more domestic production like we saw previously. However, if we produce more and demand stays the same, what then happens to the value of this product? It has to drop, right? Supply and demand. If the supply increases, demand stays the same, then it would get less. That's the point. That's what he wants to happen, believing that's going to help continue to reduce cost of goods if energy costs aren't so high. So really the potential in this sector probably isn't going to be in your oil and gas companies, but more in the exploration and production companies and the industry and those companies in those that are US based. So that's where we're looking for some potential ideas, and we're going to be watching those to see how they respond to this. There is going to be a challenge though in the renewable energy part of the energy sector, because as you can tell, the focus is now shifting again to fossil fuels rather than as much as renewable energy was under the previous administration. So these industries in the sector and these companies may have challenges from less government focus and financial support. But while we're going to do this, we're actually going to go back and forth between David and I. And what I want him to do here is he has a few stats for you he wants to talk about these different sectors that we're going to be talking about. So David, if you can
Yeah,
pop
thanks,
here
Jenny.
now.
It's pretty interesting since we have this situation where President Trump had a term and then he was off for a term and now back. We can kind of look back to his first term and see, okay, how did a few sectors react to his first term, and what are they doing now? So if we're talking about energy, I went ahead and looked at the ETF that covers energy, XLE, and in 2016, we see that XLE was up about 14% in the first month after the election. That's after the election, guys. That wasn't even when he was in office yet. Up 14%. Right now, since the election just a couple weeks ago, XLE is up about 8%. Now you might be thinking, oh my goodness, okay, so this thing's just going to take off. He's going to turn on oil, yada, yada, yada. Well, actually, if you look at the entire first term, now we're looking at 4 years worth of time. His first term, XLE did not actually perform that well. It was actually down a little bit, right? And for a lot of the reasons that Jenny mentioned, alternative energy is not going to get the same kind of support. He turns on the oil, increases the supply, lowers the price, lowers the profit, so on. So XLE as a whole did not perform super well, but the initial jump was there in 2016, and we've already seen a bit of an initial jump this time as well.
Yep. That's great. We also think that the defense and security companies in that sector could also benefit from an increased, refocusing back on our defense budget as well as national security measures. So we do think this could also be impacted positively, as well as, your aerospace would have to be included in this. It is included in this. So what do we have with that one, David?
Yeah, Jenny. So for defense and security, and this includes aerospace as well, I looked at XAR. This is another ETF covering this sector. And interesting, in 2016, XAR was up about 13% in a week. That's pretty huge. You want to talk about aerospace just taking off. 13% in a week after the election. This time around, in that first week, XAR made it up 12% in that week. So pretty consistent there. It's already started to pull back a little bit since then. Overall, XAR, as you would imagine, did better under Trump. It went and almost doubled in value in that first year. So it did very well right up until about the COVID crash. That really pulled it back. And then afterwards, it did bounce back to those highs right before Trump left office. So defense, security, those types of companies overall did well under Trump's administration.
Great. All right. And I think the one that really stood out the most from me the day after the election was actually all the bank stocks. I mean, aside from tech, but there were so many bank stocks that moved just, I at least think some of them were 10 plus 10%, just damped that much. So really deregulation is going to be the big reason why the finance sector, banking and all that would probably benefit more from a Trump presidency. So what did finance look like under under Trump, but also then this first, few weeks after his re-election?
Yeah, Jenny, it made a big move. In 2016, even again, this is before he's even inaugurated. We're just talking election results are in, and boom, in the first month, XLF, which is the ETF on the finance sector, XLF was up 20%. 20% in a month. That's pretty crazy. This election so far, it was up about 7% as of the end of close yesterday when I was running data. So about 7% up. Do I think it's going to make it the other 13%? I don't know about that. I think it could still have room to grow in the next month or two, but I don't know if it's going to quite hit that 20%. Yeah. But let's look now overall during Trump's term. XLF went up about 50% in the first year. Right now, that includes that initial 20% jump. So a year after the election, it's up about 50%. After that, it went sideways for about 2 years, right? Sideways for about 2 years. Then you had the COVID crash once again. XLF, just like security and defense, XLF, the finance sector, also made it back up to those highs right before Trump left.
Yeah. Well, and I was just going to put on my like trading hat here and technical analysis hat for just a second. You know, when you have a stock or especially an ETF go 50% in a year,
Oh
there's
yeah.
going to be a base formed at some point. It's going to
Oh yeah.
probably go sideways for quite a while. So that really makes sense. There was a huge influx, and then, you know, you've got that base being formed, then COVID, and then like you said. So lastly, we've got technology that we want to talk about. And this one, you know, you hear kind of two different sides to this story. There's some people that are kind of more negative towards Trump's policies and how they could impact technology more on a negative side because of the potential for trade wars between US and China, those tensions coming back up, supply chain issues that could come and then cause volatility in the tech sectors. But also, if they impose more tariffs, um, that would impact your tech firms a lot more than others because they're very reliant on that global trade and getting parts and different parts from all over the world. But that didn't seem to correlate to what tech did right after he was elected this second time. And I think that more has to do with the fact that he's bringing more deregulation. And so I think that really could surpass any potential negatives. But also, I mean, I have heard that, you know, I think we all know that Trump's a pretty good negotiator. He did have some, you know, show that he was all about that, I think. But I can't even remember the name of it. I'm sure, David, you know it. But he's very good at negotiation. So I think a lot of people aren't sure he's going to add a bunch of tariffs, but more use that as a bargaining tool or a bargaining chip to see if he can get that a little bit more fair and more on US favor inside of the US and our companies compared to the other countries that we're, you know, doing global trade with. But I know, you know, tech had a huge reaction, a very positive reaction to his reelection.
Yeah, Jenny, this year it absolutely did. It's interesting though, if you look back at 2016 again, QQQ, which is the ETF over, you know, the tech sector, QQQ did not really react all that much. It was up about 7% between the time of the election and the inauguration. Now, almost everything was up once President Trump got elected the first time round, right? Almost everything was up. And so QQQ only being up 7% in that time was pretty quiet. This time around, you saw the first couple days, I mean, big gap up, big candle up, and then another gap up, candle up. We were up about 6% in the first week. Now, it's pulled back a little bit since then. As we mentioned before we got started here, we're battling it out at the 20-day, so we'll see what happens. But some really interesting price action early on. Now, this is the real interesting part, Jenny. If you look at President Trump's first term, QQQ nearly tripled in the first term. Those are huge moves, guys.
Yeah.
And that includes that COVID crash. It had a solid COVID crash, just like everything else. And then after that, it just went bonkers. I mean, it just zoomed up. It thought it was a rocket ship. And it's continued up and nearly tripled over that time. Are we going to see tripling in QQQ between now and the next 4 years? I don't know about that. I mean, that's a big move. But it could happen. We'll just have to see.
Yeah, that is a huge move, isn't it? So aside from his policies and how those will impact the sectors and industries, we know that his policies could also impact the decisions that the Federal Reserve has to make with their monetary policies. And this is due to how Trump's policies could impact the economy and stimulate it and maybe potentially reignite inflation. That is a big concern that a lot of people are having right now, is that if the economy starts taking off under Trump with all of these, you know, more pro-business policies, you know, what is the Fed going to do with that? So we want to spend a couple of minutes talking about the Federal Reserve along with Trump's second term here. And I'm not sure if you've heard Trump be vocal about this, but he has been pretty vocal about he really wishes that the Federal Reserve wasn't independent and that there was more oversight in the decisions that were being made. However, since the creation of the point of it is to be an independent agency and not be influenced by any branch of government or any political party. So, you know, he is going to probably try to exert any sort of power he, you know, thinks he may have over them by trying to push them to lower interest rates, or take other accommodative measures. But Chairman Powell, as well as the rest of the Fed, remain committed to not being influenced by either political party, because their main concern is, our economy, keeping employment, a good employment rate, as well as good inflation under control. That is what their job is. It's not to do kind of the will of either political party. But the concern is right now, with President Trump's policies related to trade and spending, that could really reignite inflation. That would cause, inflation to rise. They might have to raise interest rates again. It would impact the bond market as well. And we talked about how we had this nice post-election rally, but what's interesting is we've had some kind of bigger days down than maybe we thought would actually happen. And part of the reason for that is at the end of last week, we had some Fed people come out, Fed members, or people they might not be members of the actual Federal Reserve, but a Fed governor of a state. They came out and started talking about, what the potentials of, now that Trump's elected, and his policies, and how that could impact their decisions. Because, if the economy starts growing, that could, again, reignite inflation. So when they started saying this, they're like, we may have to slow the pace of our rate cuts. And in October, before the election, there was a 76.8% chance that the Fed would have another rate cut in December of 25 basis points, or 0.25%. But now, after the election, that has come down to 59.1% chance of them reducing rates. And kind of each day that goes by, that seems to get a little bit lower. So it's already impacting the decisions they're making. So they're even talking like they may not, they're really going to probably have to slow the rate of bringing that interest rate down farther. And just one more thing on that, it's, since 2000 or so, when they started doing this zero interest rate, they hadn't done that before. So an interest rate at 3, 4, 5, 6% is actually pretty normal prior to 2000. Prior to them starting doing this zero rate, really manipulating that through either stimulus, accommodative measures, adjusting the interest rates and such. They didn't do it that drastically prior to those, the 2001 and then the 2007, 2008 major financial crises. So it's kind of a normal rate, although we all don't like it where it's at, because we're so used to the last 20 years of it being a lot lower. So there's even economists who are like, they may not be able to go back to zero. And so it's just, those are all the things that we have to, take into account, think about, take along with, of course, the technical analysis of our charts. But that even right now is already causing some volatility. But there are some other things that could cause some additional market volatility under President-elect Trump. And we've already mentioned the inflation concern, but one of the big ones will be geopolitical tensions. And we literally just saw this happen this week, although it wasn't with something Trump did, but with Biden deciding to allow Ukraine to use U.S. missiles inside of Russia. And then Putin coming and saying, I'm going to lower the threshold of what constitutes us to be able to use nuclear weapons. So this can cause impact to our market, even if it's, across the world. Generally, that impacts our markets for a few days. Now, if it's going to be directly, hitting us, or, directly with us, that might impact it a little bit longer. But those geopolitical tensions, possible continued or heightened tensions with China, Iran, North Korea, Russia, and how that could, increase market volatility. So that is something that, we'll be paying attention to. But, with Trump's first term, there were no new wars started. He was able to, do a lot of work in the Middle East with the Abraham Accords. So I think there's a lot of hope that with him getting in, that maybe he can help solve those, and help stop those wars in Ukraine and Russia, as well as in the Middle East. But another thing that could cause, again, market volatility would be the impact of, renegotiations of trade deals, foreign investment restrictions, and again, how just the global markets might react to US policy changes. So that foreign investment, trade partnerships, trade wars, those are all things that we do have to take into account. And then this isn't so much total market volatility, but it is likely that Trump's policies could cause some volatility in the environment, social governance, or ESG investing trends, because that's not going to be something they're going to focus on. And instead, Ben, you're going to join us now, Ben Russell. What instead of that is Trump focusing on? He's brought in a couple of unique people that are going to be doing something with some sort of crypto name. I don't know what's that about.
Yeah, it's really interesting, Jenny, to recognize that this is Trump's second term, and he learned an awful lot the first time. And he's
Yes.
pulling a new playbook out. So as much as what we've compared things that have been done in the past to what he could be doing in this next term, we're about to talk about didn't exist the first time around. He's actually bringing together people whose focus is going to be on eliminating government waste. So when we talk about DOGE, it's the Department of Governmental Efficiency. So this is going to be run in a co-chair position by Elon Musk. I think we've heard about him. And if you
Yep.
don't know about Elon Musk, one of the things that he's known to do is to be able to cut costs dramatically. He did it at Twitter. He's done it at lots of different companies. And he's pulling in Vivek Vaswamy, who is also an accomplished businessman. And their goal is to take a business-centric perspective on what can we do to eliminate government overspending. That has not been done before. And I think, candidly, that can have a pretty stimulative effect to the economy if it's done right, because it could force a lot of things that are being done by the government to get pushed back into the private sector, causing us to actually have more demand for products and services that we all produce. So I think it could be very interesting to watch DOGE, the Department of Government Efficiencies, and the impacts that that can have. And I do suspect it's going to be disruptive, possibly for the positive.
Yep. And something
So-
else that was disruptive during Trump's first term, David, you have got some personal experience with that. So can you tell us about that?
I do, guys. Trump likes to tweet, right? That's something we all know. And whether you love him or you don't love him, I think we can all agree that Trump is a bit brash and unfiltered at times, right? And so when he likes to tweet something, he's just going to speak his mind, and things are going to happen after that. What we saw a lot of happening in his first term is he would tweet something, maybe about the trade wars with China, and all of a sudden the market would react negatively for a couple days. And I happen to remember this quite well because right around this time, I was a brand new student at TRADEway, and I would be putting on trades. I would get into a bullish trade. Trump would tweet something. I would stop out. The next day, the market would go back to where I thought it was going to go. I'd put on another trade. Trump would tweet something. I would stop out. The next day, the market would go back to, and I went through this cycle a bunch of times, right? I was like, President Trump, please tell me before you send out a tweet. Goodness gracious, I'd close my position, get out, and then maybe buy a call. Anyway, I'm not emotional. It's all good, right? So anyway, so this was happening, but this is a type of volatility that was just on the short term, right? Smaller term, because if we look at the end of 2019 on this chart, we don't even see it. We don't even really see it there.
And
So,
what were those tweets specifically, generally about the ones that you're mentioning here?
yeah, it was specifically about the trade wars with China. China would do something, and then President Trump would respond through Twitter, and then the market would react for a couple days. So we're looking at weekly charts here, so we don't really see those. But in the short term, there was some volatility that was happening there. So it's just another type of volatility that we can see. Now, guys, we're looking at the entire 4 years here again of President Trump's first year, and we don't know exactly what will happen over the next 4 years, right? There could be a lot of similarities. In some ways, that could be good. Hopefully, in his fourth year, we don't have another COVID crash, right? Hopefully, we can avoid that one. But regardless, whether we're seeing bullish times, bearish times, neutral times, we can help you in the AMPT program, right? We have portfolios structured just for those situations that happen in the market. And so we want to be able to help you. So Ben or Jenny, you guys want to tell us a little bit more about what we can be looking for in the AMP program?
Absolutely. So the AMPT program, the AMPT, we've said it a few times. Sometimes people don't know what that stands for. If you haven't figured it out at TRADEway, we really like acronyms. To me, they're sometimes punny acronyms as well. Assisted Managed Portfolios by TRADEway. And it says an awful lot about what we do. We assist you in managing your portfolio, but we do it as a trader would, not as an investor, not just as a buy and holder. And what we leverage is a company called Interactive Brokers. It's abbreviated IBKR. And many of you have never even heard of this company, IBKR, but they are a brokerage partner that allows us to manage your accounts as if we were clicking the buttons on our own account. So Jenny, are our friends likely going to even have heard of IBKR before?
Often people haven't because their main focus is to advertise and bring in financial and investment advisors rather than the retail customer.
Absolutely. And what's key for me, Jenny, is it's the technology that IBKR provides that allows us to do what we do. Well, the name of our company is called TRADEway. Well, we trade as a way in which for us to be able to manage the long-term funds. And what we really find powerful is that when there's a strong correction potentially in the making, which they seem to happen every fewish months, every fewish years, and we never know when the big one's going to hit. So we actually have the capability of, with a click of a button, it can take us just a couple of minutes for the entire portfolio to get defensive, as if we are pressing the buttons on our own accounts. And what's powerful about IBKR, Interactive Brokers, is they do something I don't know any other broker does. When you're not in a position and you sell it and it goes to quote unquote cash, they're paying 4.287%. That is much higher than most of the brokers. If you're with some of the other brokerage partners that we talk about, I'm not going to mention any names, but let's just say that they typically pay 1%, or in some cases, 0 when you are in cash. So
Yeah.
for us, cash is a position when you don't know, and it's a big part of our portfolio management strategy because we at TRADEway think the best money, the easiest money to be made is after the crash, you preserve through the crash. And when everyone else is seeing the huge gains to get back to even, well, let's change that scenario and let's take advantage of a higher cost basis. And while our neighbors are getting back to even, let's try to create some potentially generational changing wealth. All right, so TRADEway, as we use this IBKR tools, the sets in the background, we can be in either of the portfolio mixes that we have. And what's very unique about what we do, again, we're thinking like traders. Well, we don't just trade to the upside. We don't just trade to the downside. We have capabilities of doing both. So we have bullish portfolios, squirrely portfolios, and we have bearish portfolios to be able to match up when the market cycles are more clear. In Interactive Brokers, they do another thing that's very unique. Transaction fees can often be very difficult in a lot of these platforms. Everything we do is very transparent. And because we're batching together transactions from thousands and thousands of trades together, and when we click the button, there's an awful lot of money moving there. What Interactive Brokers allows us to do is to batch together those transactions so it really reduces the costs for you all as you're engaging with our services. Now, there's one more factor, Jenny, that maybe some of our friends have figured out that, when we're professionals, we get to pay a lot of money for market data, don't we?
Yes, like 125, 130, 150, it depends where you're at, but it's a lot.
Yeah, so I mean, at Interactive
A
Brokers, it's
month,
about 100.
that is.
Yeah,
A month.
$145 a month is the market data fees that we get just to be able to see those numbers on the charts change because we're considered professionals. And for any of our friends out there that have an LLC or a business, if you're trying to trade as a business, are they going to have to pay those same market data fees, Jenny?
Yeah, they are considered a professional. Any sort of LLC is going to be considered, entity is considered that. So they would have to pay those professional market data fees for those accounts.
So how might they get around that problem, Jenny?
Well, if you have us help manage those accounts, then we're the ones paying those professional data fees if we're then managing that account for you.
Yeah, absolutely. And it's a lot of our friends that are, doing this as, blended with the business and doing their
Mhm.
own personal trading as well. What they've discovered is that TradeWay can help them on that side to reduce some of those expenses and to show some of that activity that they want to see. So why are we using interactive brokers? Well, I mentioned it previous, but it's worth repeating. The amount of money we get paid when we're not in a position is the best in the business. We're not exposed to some of the same risks that we see within the banking sector. If you don't recall, there's been this problem where there's this inversion in the interest rates that's caused a lot of instability in the banking system. IBKR does not have that problem. They do not have long bonds that they are exposed to. They're entirely in short treasuries. And because of that, it gives a much greater security and a sense of, let's say, safety for our funds. Right, when we talk about where we put our money, we want to make sure that when we go to get our money out, we can get our money out. And that typically comes down to what is the liquidity and the availability of the funds at those institutions. And what Interactive Brokers does uniquely is because they leverage short-term treasuries, they do not have the same liquidity risk. All right, let's talk about one more thing. Have you heard of FDIC, the Federal Deposit Insurance Corporation? It's an insurance program, if you will. And if you go down to your local bank and you look at the terms, FDIC insured up to $250,000 per depositor. Interactive Brokers, with their enhanced FDIC insurance policy, does something very interesting. They group together 10 different banking partners in the background. And if you're in the enhanced FDIC insurance program at IBKR, you're eligible up to $2.75 million worth of FDIC coverage. I don't know any other broker that does this. It's really a powerful combination. And because they cater to people like us, institutional investors and investment advisors, they have the access to these programs that you get access to as clients of the AMP program. Last thing I want to mention there, Jenny, is that they are one of the strongest institutions. And what David Mitchell told us when he was creating this partnership with Interactive Brokers is back during the financial crisis in 2008, many,
Mhm.
many, many people were taking their funds out of banks and putting it into Interactive Brokers because of the way they manage their cash and how they leveraged US Treasuries. So a lot of reasons to like IBKR.
Yes. Thank you, Ben.
All right, so let's talk a little bit about, for those who are interested in knowing more, the AMPT program, that Assisted Managed Portfolios by TradeWay. We blend it into two different pools, two different buckets of money, if you will. And it's exactly what we teach you at step one. Remember, we're thinking like traders. We suggest that we help you to invest 80% of your funds. And that 80% is more, let's protect it, let's keep it safe, let's be in cycles with the market. When we're not clear, when we're not confident, we want to be protectionary. And then we want to be bullish when the market is bullish. That is the AMPT 8x16 long-term investing program. David Mitchell created it. By the way, it's biblical. Comes straight from Ecclesiastes and Ezekiel. The very things we invest in come from the Ezekiel passage describing the various aspects of the economy. Pretty amazing study to see it. But our team is also going to layer in the things like market tone and the allocations of the portfolios. And that's the work that we do in the background. Now, Jenny, do they have to press the buttons on their portfolio?
No, we're going to be able to manage that and have discretionary trade authority over the accounts that you would bring in and have us help manage. So you give us that permission, and we're the ones that are making those changes when we see fit with the based on market tone, based on technical analysis, and all of that.
It's pretty powerful, Jenny, to recognize that it's always going to be an account in our client's name. So,
Mhm.
Jenny, if you
Yep.
were one of my clients and you were part of the AMP portfolio, you would get notification from Interactive Brokers telling you that we made a change. You can
Yep.
log into your account anytime you want to. You can see everything that's going on. It is
Yes.
completely transparent. So I really enjoy the IBKR tools from that point, and it's a great
Mhm.
partnership for our friends that are looking for some help with their 80% money. But if we go to the next slide, it's not just the 80% money. Again, we think like traders. So what about short-term trading? What about our quote unquote 20% money? Well, we have invented what we call the ultra portfolio. Did anybody see a pun there? I told you I like puns, right? The up portfolio, it defines what we're trying to do with a smaller part of our capital. We want to take 20%, be more aggressive. We'll go in and out. We will be in individual stocks if your account is above $25,000. We also have the capability of trading options in those portfolios when they match up with our criteria. And what we do is we take the things we teach you how to do, and we get in and we get out, we get in, we get out, and it's an extremely active service, and it's a little less sensitive to the market. All right, so that's the managed short-term trading for the aggressive investor. And again, you don't have to press the buttons. We do, but you see everything that we do. So are you interested? Is this something you'd like to have some help with? Well, we'd like to help you to get started. You can contact us. Now, I do have to think, Jenny, I do believe that we're coming up on the holidays, right?
We are. I do want to know, I did launch that poll, Ben.
Okay.
But yes, we are coming up on the holidays. So, Ben, why don't you go over that, and I'll let them know what they can expect here from us here, and go over the poll real quick.
Perfect. Well, here's what we'd like is, for many of you, you have some complex situations that you'd like to talk about. Now, when's the last time you got an opportunity to speak with a financial advisor to get your questions answered? Well, what we're going to offer you is if you'd like to know more about the program, how the program works, we'd be happy to have a personal consultation with you to describe the program. And this is a chance for you to evaluate if AMPT might be good for you and your family. Now, I can see here Colin is like, Colin, the minimum for the Ultra portfolio is $10,000. We'll trade straight stock with that. But if you have above 25, that's when we would do options. So we can still help you, Colin, with that Ultra portfolio. The $10,000 account size is, however, the minimum. Now, what we want to do here is that if you are working with one of us already, many of you on this webinar, you are working with one of us. Do me a favor, just let us know if you are working with us, because then that way I know that, for example, if you're working with me or if you're working with Jenny, we can help get you paired up. Now, Jenny, when we do this, when we have these consultations, these meetings are a lot of fun, aren't they?
They are. We're going to be able to talk about, where you're at, right? Are you looking to retire? What are your goals? Things like that. Get to know you a little bit in that meeting. And then we're able, the main point is we really want to be able to see where you're at, see what kind of accounts you have. There are certain accounts, we don't only help with LLCs and business accounts. We can help with your IRAs, with your Roths. There's SEP IRAs, simple IRAs. We can even help if you just have, cash at the bank or in a savings account that you'd want to get invested. We would help you open an individual or a joint account, and we can help manage those funds for you. So what's going to happen is if you answer this poll here, then we're going to get you an email and a text sent with our calendar link so that you can book that meeting with us, and then we can discuss all these individual things based on you and where you're at currently with your when you're investing.
Yes, and Jenny, I think that the powerful part of that is when you and I or one of our other representatives get an opportunity to meet, we're not just talking about finances, are we? We're
Mm.
also talking about the family goals. I've loved getting to connect with people to see, the ministries that they support and the things, the passions that drive them. It's been so much fun to get to know our friends out there, not just through like a webcam, a one way, but an actual relationship with people. It's been so good for me to meet so many of our friends and to see the goals and the dreams and the things that the Lord has put in their hearts. It's been a lot of fun for me to be involved in that.
Yes, it is. It's great.
Okay, so let's go on to that last slide, if you will. And what we would like to just invite you to do is to be able to look for that invite to come. As Jenny mentioned, again, it will be an email and or a text. Now, David, what about our friends that are watching this webinar after the fact?
Absolutely, Ben. Guys, if you're watching this webinar, thank you. Thank you for watching on the recording and taking the time out for doing that. You can still get in touch with us as well. I know you didn't see the poll or anything, but feel free to reach out to us, tradeway.com/amped. You can also send us an email directly at amped@tradeway.com. So a couple different ways that you can reach out to us. If you'd like to have a conversation with one of us IARs in the AMP program, we'd love to meet with you and look at your portfolio together. So for everyone on here now, thank you for being on as well and taking the time out of your day to invest in your future and to learn some things and just to nerd out on some statistics with me. I love it, guys. So thank you all.
Awesome. Okay. Well, thanks everyone for being with us, and I look forward to seeing you again soon. Jenny, is there anything else that we need to do to finish out this poll today?
There's one more question that somebody had. And I think it's important that we actually touch on that. They were asking, sorry, is there a tax penalty for moving funds from my current advisor to AMPT? And generally, no. If you're wanting to roll over an old 401k or transfer over an IRA, we're going to want to keep those as retirement funds and you not take tax penalties. But those are the kinds of questions that we can answer directly with you and specific to your situation when we meet with you.
Awesome. Very, very fun. And I think it's important that I'm getting a few of these questions in the background. So that's the reason why we do those private appointments. And, Jenny, the other thing that we've described in the past is sometimes there's some complexities with this. Are we just going to let our friends do this all by themselves, or are we going to help them with it?
No, we have a whole team in the AMP department that specifically, once you've met with one of your investment advisor reps, like we've got on here, once you've met with us, decided you're going to move your accounts over, we have a whole team that's going to help you get your accounts set up at Interactive Brokers. They're going to actually walk you through that application process because we have a lot of that application already filled out for you, actually. And then after that, they're going to walk you through the whole funding process. So if you're doing a rollover or if you're transferring over an IRA or you're setting up, a business account and all that, they're going to know what to do and how to help walk you through that, because it's not every day that you move an IRA to another from one broker to another. I mean, some people don't ever do it in their entire life and in their entire, working career. So we have a whole team that's set there, that's there to specifically help you with that, to make that process a lot easier.
And it's really important, Jenny, because it's kind of complex, right? So I see
It
a
is.
couple of people asking about 401k accounts. Here's the question to ask. Can I roll over? So you ask your benefits administrator at your employer. If you've left the employment, you absolutely can roll it over. And what that looks like is it's 401k pre-tax funds or 401k Roth funds. We help you to move it into an IRA pre-tax account. We help you move it into a Roth account at Interactive Brokers, and there are no tax consequences for those recharacterizations. That's what our team helps you to accomplish, because otherwise it can get a little sticky. The reason why we have this team of people is to make sure that there aren't any tax consequences unintentional in that process. So we help make sure those things get done correctly. So great question there. I appreciate that one very much.
Yes, good questions. All right. Well, it looks like about all the questions we have. So once again, we thank you for joining us today. We hope you found this webinar informative and helpful. And if you do have any questions, please do let us know. You can email their amped@tradeway.com. And again, I know David already touched on it, but if you're watching this as a recording, you can email that for more information, or at the tradeway.com/amped, there's an amped interest form that you can fill out as well. And then one of us could be in touch with you that way. So hope you all have a wonderful day, and next week's Thanksgiving. Woohoo! So enjoy Thanksgiving with your family and friends. And just thank you again for taking the time out of your day to join us.
Thank you, everybody.